Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right then, we're here, we're back on YouTube. It's been roughly a month since the last video update and we look at Bitcoin once a month. That's what we do now here on YouTube. If you'd like to have more than just a monthly look at YouTube, you could always join the Patreon where we do a bit more. Not a lot more, but I'll give you an idea of what we've done over the last month. So let's have a look back at July, shall we? So we started the month with the dividend calendar and stock rating system for July, covering multiple stock picks for the month that you could look at and download the relevant folders, including an Excel file and a PDF. We then had a lesson update for the Elliott Wave Introduction to Elliott Wave Theory series, episode 5, New Rules for Diagonal, since the rules for Diagonal in the new edition of Elliott Wave were updated. So finally got around to doing an update for that. We had Tesla analysis that month as well. We also had Bitcoin, crypto and FUD is the bottom in, talking about Bitcoin and crypto in general. We did an update on Bitcoin a few days later. We then had our weekly live stream for the 14th of the 7th. We then also had an Ethereum update after that on the 20th of July. Then we had a stock market alert, me putting an alert out on the 21st of July to our members, pointing out the inevitability of a stock market correction, which was then imminent. And of course, I'm sure you guys have noticed in the 3 weeks since that has indeed played out. We've also had another live stream after that for the 21st. Then we had an update on XRP. And then we had another live stream on the 28th. All of these between 2.5 or 3 hours normally. Well, between 2 and 3 hours, sometimes a little bit longer. And then we had meta-analysis, and the sound went out halfway through the video, so that was fun. So I had to re-record it, and then we had meta-analysis again. But not before we posted the dividend calendar and stock rating system for August, which went out on the 1st of August. So that's been the last month on the Patreon, just to give you an idea. Like I said, not exceptionally busy. But if you do join up, you get all of this extra content, which you won't get at all here on YouTube, not until my life circumstances allow me a little bit more free time to update you guys. But you also get access to the Discord, plus a whole bunch of other benefits as well. Access to all previous videos and the Elliott Wave series, and the trading videos as well, helping teach you how to trade and how to apply Elliott Wave. So there you go, guys. That's my spiel for the month. That's my hard sell on the Patreon. Feel free to sign up. There's a link in the description box below, but of course you don't have to. It's totally up to you. Anyway, let's move on and have a look at Bitcoin. Okay, so we're going to start here on the weekly chart, looking at the long-term time frame and the long-term cycle of Bitcoin. So what I'm going to do, just to clear things up here, is we're just going to remove the Elliott Wave count for a moment and focus purely on the structure and the time frame of these bull markets and these bear markets that we've had. So if I just bring up my crypto seasons for a minute, and then what we can do is put in our correction lengths and our corrective depth. So we've seen bear markets of 86% decline, 84% decline, 77% decline over the last 3 bear markets, and we've seen a 413-day correction, a 364-day correction, a 378-day correction. If we look at the bull markets, we can see a 1064-day bull market, another 1064-day bull market. So all they've done is taken another 1064-day bull market projected from the end of the last bear market, leaving us time in the 4-year cycle from low to low, market bottom, market bottom, market bottom, market bottom. And we can see that if we project forward another standard bull market of 1064 days, it leaves us a 385-day bear market, which is very similar to the 378, 364 and 413 that we've seen before. So the cycle continues to tick by like clockwork for the meantime, so it seems to be a perfectly reasonable thing to expect. Now, it doesn't mean it will be 100% right, it doesn't mean it will be right, but what else have we got to go on other than our Elliott Wave count, and we will cover that in due course. But I wanted to start here first. So essentially, if we just leave the market cycle up for the moment, we can see our finish line. Finish line represents the expected market peak. The expected market peak will be on the 13th of October 2025, and then roughly just over a year later we will bottom at the bottom of the next bear market somewhere around November 26. This is going to be a wave 4 correction in our Elliott Wave count. It will be likely, I'm not saying for certain it will be, but I think it probably will be a wave 4, and it will be the first wave 4 at large degree we have yet we have yet experienced. So will it be longer? Will it be shorter? Will it be more sideways? Will it be deeper? Will it be shallower? Well, reason, I would argue, given that all of our prior corrective forms, all the way up at our 1s and 2s, have all been classified as sharps. They are all essentially zigzag sharp structures with no new price extreme. So no move to a new price extreme above the prior high. That would classify as sideways correction, commonly known as a flat 3-3-5 structure or combination in Elliott wave theory. So we haven't seen any of those. So my expectation that this next bear market, when it arrives, will not be a sharp, but will actually be the first sideways correction we get. And on that basis, following our primary count of 1 into 2, 1 into 2, 1 into 2, this will be our first 3 into 4 at a large degree, at primary degree. Now, I don't know that for certain. I'm just following the logic of this continued progression stepping its way up through the successive movements. So that would stand to reason that the next moves will be 3s and 4s at larger wave degrees through primary, cycle and super cycle over the next decade or longer. Now, I don't know if these corrections are going to take longer. They may well do. They may be shorter. We've never been through one. I don't know. My suspicion, though, if it is a sideways correction, and it is just a suspicion, mind you, is that we will get a slightly more time consuming, not necessarily a lot more, but slightly more time consuming and less aggressive. It won't be as deep as these 80 and 70 odd % declines. It will be more likely somewhere between 30 and 50%. Now, this does fit the narrative. We've had sharp corrections, violent declines, when essentially crypto was in the hands of was purely in private hands and retail traders during the booms and the blow off euphoric highs, whereas now it will be in institutional hands as well as public hands, and therefore some of the volatility which is inherent within these sharp corrections may well dissipate into more sideways structures, and that fits the Elliott wave count nicely as well going forward in time. So that is essentially my expectation. Expectations are there to be subverted, in some cases by genuinely unexpected events, in other cases in pop culture by terrible writing of popular TV series. But besides the point, I may be wrong, but it seems like as good a plan as any in the meantime. So that's how I see the long-term picture. Now we're going to come in and talk about the Elliott wave, and then we'll come down to a smaller time frame and look at the most recent price action, because it really is quite interesting at the moment. So as previously mentioned, we've gone through cycle and primary degree wave 2 corrections, and we have now completed an intermediate wave 2 correction. We are now in the intermediate wave 3 of the primary 3, which will top out, I believe, at the end of the next bull market. Now, there is a possibility that we have already completed intermediate 3 and intermediate 4 and are now in the 5th of that primary 3. This is not my preferred count. I don't believe we would have completed the 3 intermediate degree having only just cleared the prior all-time high. My belief is that we are actually in a 1 and a 2 here at intermediate degree, and then a 1 and a 2 here at minor degree, with the 3 at minor degree and the 3 at primary degree yet to come. At intermediate degree yet to come for the 4 and the 5 to top out at primary 3. And that is how I've got my count on the smaller time frame. So on that note, we're going to come in now and have a look at that behavior over the smaller time frame, and we're just going to focus here. As you can see, this is the correction we've been going through for a while now, and we're just going to focus on the move off of the low, because this is what I've jazzed this up with a bit more detail within this count so we can get an idea of what we're looking at now. Unlike the prior moves we've seen off of these lows, and not having a clear completed 3-wave structure, we now have a very clear completed range down to this low here. A 3-wave move after a 5-wave move up, and we've followed it with a 5-wave move off of the low and what might be, but we don't know for certain yet, a completed 3-wave structure off of a retracement. So What do we call that? Well, we call that the STS in this world. At Green Star Trading, where I came up with the idea of the STS, which is the standard trade setup, it is a 1-2, 1-2, 1-2 at as many degrees as you can handle in order to shrink down your margin of risk, in order to give yourself a tradable stop and a manageable proportion of risk to slip inside of the portfolio. And that is essentially how the idea works. There are multiple videos about it on the Discord and on the Patreon, but essentially what it comes down to is we've had a 1 and a 2, and then we've had another smaller 5-wave move up and the corrective move back. The caveat here is this is a very short-lived correction. In the meantime, it has come back almost to the 50% retracement, but not quite. It did come back into prior support, as we can see these highs back here. Okay, these lows and these highs coming together to essentially provide support at the current price. Now, I'm a little suspicious of just how quickly it's corrected, like a single zigzag down. I suspect there may actually be 1, 2, 3, 4, 5 waves in here with an extended one. So what that gives us is two options. It either means that the break of the upward trend is confirmation of the beginning of the correction or the end of the correction. So we can either have the move down like this into 5 into A, then we'll get B to back test the trend, then we'll get C to move lower between the 50 and the 61.8, or perhaps even deeper into wave 2 targets of greater depth around the 78.6 and the 89% Fibonacci retracement levels. Now I don't know which one it is, and I doubt anybody does. Nobody does for certain. But it could already be done. It could be a very brief 1, 2, and now we're going to race off in a 3. So if we go to new highs now, then that has very likely been the case, that we've actually completed another 1 and another 2, and we've completed this 5-wave structure up. If, however, we roll over and take out the prior low, then we are likely heading deeper into greater depth, into find support at lower levels, maybe around the 61.8 to the 75, the golden zone, or maybe deeper. Essentially though, what we're looking for is the continuation of a larger 5-wave structure up. So let me just sum up or zoom out just a little bit. We're going to zoom out. What am I saying then? Well, what I'm saying essentially is that we've had another completed 1 and 2. Okay, so this becomes a 1 and this becomes a 2. 3, 4, 5. And we're going to just put this in at minor degree. And if we just take the top of the, what we're going to do is we'll stay in linear, I think would make sense. Someone recently criticised me, not in an offensive way, I think they were genuinely trying to help, saying how, oh Tom, I noticed you weren't using logarithmic adjustment Fibonacci extensions in the prior video, you really should do that, blah blah blah. And I'm like, look mate, I know. I've been doing this for a long time and I know about the tools. I actually teach on those tools in my chart series on the Discord. I think the point was missed. I was making a linear comparison of linear measurements, hence why I wasn't using the logarithmic adjustment. So just in case there's been any confusion about that, if I'm looking at something in linear with linear measurements, I'm doing it on purpose. If I'm doing it with log, I'm doing it on purpose. I'm not saying I'm immune to making mistakes, but the whole point was I was actually labouring on that point. Now, we zoom out here and what we can see quite clearly is a bunch of janky sideways nonsense, right, which is this correction we've been in, and then we get a beautifully clear impulse out. I will give you 80% probability that we are not going to come back below that July low. Right. That doesn't mean it's impossible, because there could be a structure here that I've missed where this is going to continue to correct, but just based off of the simplistic idea of 5 up and 3 back, 5 up and 3 back, the 80% plus of probabilities of outcomes after leading with an impulse after a 3-wave correction lead to new highs, lead to a break of that corrective structure. Now we've come back to test it. This is so incredibly ordinary and typical. It's the standard, essentially, is how I would just explain it. And what's also very standard is to break out and then back test that trend of those prior downward tests. Now the reason we do this, a couple of reasons. One, to confirm that we actually have buyers on price support, and it's also the screw over breakout traders who tend to buy on impulse and not really think very much about what they're doing. So we tend to break out, people see the break of a trend and they buy, and they tend to buy on leverage and they tend to buy aggressively, and then they get walloped and they lose their money, and then the market picks it back up at the sensible level where you should be waiting, because we buy retracements, not breakouts, and then we move higher. So that's very much what I would expect to happen next. And we've had 1 2 1 2 3 4 3 4, nice clear extension within the 3 into the 5, and now we're looking for 3 waves back. Now, like I said, it could be done 1 into 2 here back at the median line, and then we move higher, but my gut tells me that the orange count is probably the correct one, and we're going to go a little bit lower. Okay, and who doesn't want it to come a little bit lower? Eh? Who doesn't want an opportunity again? You know, we had an opportunity to buy it here, opportunity to buy it here, opportunity to buy it here, and multiple times again. Who's going to sniff at one more opportunity to buy it again? So we're going to await that correction to come a little deeper, but if it swings to a new high and breaches that prior high and breaches this downward trend, we are likely going to get an explosive move higher. That is likely to be followed by a correction back to support, and then the real fun begins, and we are on our way within the 3 of 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 the 3. It's 6 or 7 degrees now we'll be at when this thing finally blows up. Finally, I say finally, we're up here at 70 fucking thousand, for God's sake, pardon my language. You know, when this thing continues to explode higher, it's gonna get pretty mental, and that's normally the last bit of the bull market, isn't it? And we've still got 400 and odd days to go, so maybe it's not going to get super mental yet, but when it gets into the 5th of these wave 3s at multiple degrees, so 3 4 3 4 3 4 into those 5 into the 3 5 into 3 5 into 3, and then the final blow off move at primary degree, that I think could be absolutely insane. So but it often is at the end of the bull market. Either way, I'm waffling like crazy now, so sorry about that, guys. That's the way I see things at the moment. We've had a completed impulse off of the low, 5 ways up, beautiful, channeling nicely, and now we're just waiting for a completed correction before we springboard higher. If for any reason at all, we come back below that 20% probability does play out, and we come back below this level here, we're going to put an invalidation point here for the primary count, then we need to have a rethink about what's going on in this corrective structure, because to have finished, this won't be a lead of a 5, this would have been a finish of a 5. I can't see a way, in all honesty, at the moment for it to make any sense at all for it to be corrective, so I'm very, very bullish and very odds on that it's not corrective. It may come deeper, but I have a very low probability of it coming back below that low. But if it does, we should always have contingencies, and we should always be prepared to come up with an explanation as to why, and to take advantage of lower pricing in this market, I feel. So I'm going to put that into the folder and into the primary, into the bullish low folder as such, and I'm going to leave it there. I am not covering a bearish count today. Sorry to disappoint you if you're a bear. It's not because I don't believe any are possible, although they have become extremely unlikely given the run on Bitcoin we've had for many months now and the sheer stretch we have to engage in to get a bearish count to complete. But I'll make a deal with you. If we move below 53,550, I would definitely come back at you with as many bearish counts as you can handle, okay? Or at least one, but maybe a couple more. So there you go, guys. We're going to leave Bitcoin there for the month. Like I said, if you're interested in getting a bit more content, feel free to sign up to the Patreon. If I'm absolutely honest, you might want to leave it another couple of weeks or so, because I am going on holiday all next week, so I won't be back in the office until after that. But either way, you've still got a whole panoply of old videos and the Elliott Wave series on there to consume in the meantime if you're interested. So thank you very much for watching. If you've liked more of what you've seen, please subscribe, smash the like. It really does help keep the channel alive while we wait for me to get back to full-time employment here. So thank you very much. Take care of yourselves, guys, and I'll be back with you as soon as possible. All the best. Bye.